more pressure today. We're down about 0.5%, and of course, not a very good day to resume trading. So clearly a bit of pressure. But are we seeing light volumes, given the fact that most people could be still in holiday mode?
Well, volumes were up significantly, actually, up 147%. There were some crosses today, I think, that drove that. But I think you're right to say that the market is still, in sort of relative holiday spirit. I think just moving around Lagos, even, it's clear that everyone is not back in full swing, as yet. So that's a fair comment, I'd say.
Yeah. What was driving markets lower today? I mean, on Monday we know it was the likes of Oceanic Bank, other lenders as well, which have had, of course, a very good run. So then we saw a little bit of pressure coming through. What drove markets to the downside today?
Well, I mean, I would say that down 0.05% is a very, very marginal move. I would say markets were essentially flat today. But, you're right in terms of the downward pressure on the affected banks. We saw a lot of positive momentum in the aftermath of Amcon news flow. But I think that in general, these stocks are being traded on a relatively speculative basis. In terms of actually taking a step back and thinking about how the share structure of these banks are going to wind up through this whole reform process, it's really hard to say. So I can't see the rationale for investors taking positions in those names and holding on to them until there is clarity on the ownership structure and deals that will take place.
Well, it seems that it seems that a lot of these banks, of course, have started to price in the good news. Of course, preferred bidders coming to the fore as well. Let's touch on Oceanic. More than tripled in value since early October. Lost around 5% on Monday. Looking at these rescued banks, do you think they're starting to price in a lot of the good news and they don't really have much movement for upside momentum going forward?
Well, to be honest with you, in terms of pricing in good news, I would more look at the unaffected banks. I mean, if people are engaging in the affected banks on a speculative basis, then depending on people's appetite and the technicals, that will determine essentially what the stocks do. But in terms of pricing in positive development in the sector, the more rational vehicle for doing that would be the unaffected banks, and I think we have seen that also. We've seen some very robust performance among those names, and they haven't given up as much of the gains. And I think that we would guide investors more along those lines to actually look to take positions in banks where there's very little event risk.
So when you talk about unaffected banks, what are you looking at, Rele, at this point in time?
In terms of particular names?
Yes.
Well, we still like the names that we have been citing. Among the tier 2 names, we particularly highlighted Skybank and Diamond Bank, and a bit of Fidelity as well, given the valuations. We've seen those names perform pretty strongly, but there's still a significant amount of upside to go based on our 12-month price targets. We'll still see north of 50% upside in both Diamond and Skybank based on our valuation. So I think that there is much more of a robust rationale for taking positions in some of the tier 2 names that still offer healthy upside, and there's very little event risk. We don't expect Skybank or Diamond Bank to participate in M&A. Fidelity, perhaps, yes, we still do, but again, given the sort of price to book levels that we're seeing in that name around sort of 0.5, 0.6 level, there's still attractive upside.
Rele, it seems that the banking sector, the rescued banks, Amcon, have really dominated the headlines, and perhaps some of the other themes under the radar at this point in time. What do you think is going to drive markets going forward? Do you think it's going to continue to be Amcon and the banking sector?
Well, I mean, I think given the weighting of the banking sector, and despite the movements in the market composition, it's still an important sector, and it will remain so for the foreseeable. So I think that we still have some more momentum in that regard. We've been saying since around sort of September that it would be Amcon initiating loan purchases from the affected banks and indeed the unaffected, as well as the announcement of M&A transactions. And I don't think we've seen the full sort of unleashing of that positive momentum, in that we're still waiting for M&A announcements to take place. So I do feel there's still some additional mileage from the banking sector in terms of driving the market. But away from the banks, I think that some of the food producers have somewhat lagged the market, and I think that there's still some positive momentum to be seen there. Names like flour mills, Dangote Sugar and Dangote Flour, we see upside of in the 60s and 100% for flour mills in particular. We think that investors have been somewhat cautious because of the uncertainty or volatility around commodities commodity prices, but we need to recall that these prices for sugar and for wheat are still significantly below the highs, and we still see significant upside in these names. Another name that we see great potential for is Oando, and of course the longer there's uncertainty about the regulatory framework and the evolution of that, there may be some reticence on the part of investors, but we still feel that the company is committed towards changing its structure and focusing increasingly on the upstream, and that will basically shift the earnings mix and profitability and the outlook for the company going forward. And we're still committed to that story, even though it may seem to linger before it really kind of takes off.